Welcome back to the cryptocurrency and blockchain track at Money 2020. If this is your first session at Money 2020, well, you're at the right place. But if this is not your first session, you're still at the right place. Keep on tweeting, hashtag Money2020, all questions to be posted on Slido, so slido.com, and hashtag Money2020. Now, with a quick show of hands, how many of you think that blockchain is going to change not just banks and money, but the entire financial system? With a show of hands, quickly. Oh, that's a lot of people. Okay, you're at the right place. Our next session is exactly about this. It's an interactive discussion between some really cool people who are sitting here at the front of the stage, discussing how blockchain is really changing this across verticals, across the world, and how a revolution has started in many parts of the world through tokens, DLs. It's also changing how other industries are emerging to a new model of financing. Our panel of international experts helps make sense of it all, from ICOs to security tokens and decentralized exchanges. And we take an informed look at the future of finance as enabled by technology. So the session is Wall Street 2.0, will blockchain revolutionize global finance? And our moderator is Dax Hansen. He's a speaker ordinaire and a partner at Perkins Cole. Join me up on stage. We also have Igor Denisov, Olga Feldmeier, Dan Morehead, and Jennifer Peve, who will all introduce themselves on stage. Thank you so much, Great. And good luck.
Thank you very much. Well, good afternoon, and thank you for attending the session. I think we're going to have some fun with it today. We are, as was described, going to be delving into the details of Wall Street 2.0, global finance, and really how blockchain technology and cryptocurrency technology may disrupt that space. We have some very knowledgeable panelists here from a wide range of backgrounds, and I'm going to let them just briefly introduce themselves. Maybe starting with you, Igor, give us your name and your title, and then tell us in one sentence or two, what is it that you do and why is it relevant to this topic today?
So my name is Igor Denisov, and I'm the head of business development at Polymath. We have started by creating a permission token protocol, and now on top of that protocol, we are building an origination platform.
My name is Olga Feldmeier. I'm CEO and co-founder of Smart VALOR, Swiss-based company. We're building the decentralized marketplace for tokenized alternative investments. And why this is relevant for you guys? Because I believe that with tokenization of assets, we're going to transform and change the industry of alternative investments.
I'm Dan Morehead, the founder of Pantera Capital. We're an investment firm in the blockchain-enabled space, investing in the spectrum from pre-auction ICOs to liquid cryptocurrencies and then venture investments. And I did the first half of my career in Wall Street 1.0, so I'm psyched to be on this panel.
Nice.
Hi, I'm Jennifer Peve. I head up business development partners and fintech strategy at the Depository Trust and Clearing Corp, DTCC. And I think, technology innovation and the advancements in technology have been a catalyst for change. And for us, innovation is about staying relevant. And we understand business models are shifting, and we want to be a part of it.
Wonderful. Great. Well, we thought maybe we'd first of all just share a couple of fun facts or statistics that this panel had thought of that might just kind of set the ground for the future conversation today. So maybe starting again with Igor, is there a fun fact or a stat you'd like to throw out?
Well, we'll see how fun this is, but in 50 days from now, BACT will officially launch, and we're going to see the first institutionally oriented Bitcoin futures trade with physical Bitcoin delivery as an option. So 50 days from now, the clock is starting, and we'll see what impact this really does have on the crypto space and the institutional investors in it.
The fact I like most is that currently we see around 30 billion US dollars flowing into funding of blockchain and ICO companies through ICO. And if you compare this to venture capital industry, well, last year they raised 55. So they're kind of on the way to match it.
Yeah, to put that in perspective, that's 5 times the amount of blockchain venture capital that's gone in. So ICOs have exploded into people's consciousness, and later today we'll talk about whether that was, put some perspective on that.
I mentioned Catalyst for Change. If you think about there's a fun fact out there. Charles Schwab took 30 years to reach 10 million users or accounts. Coinbase did it in 4.
Wow. And because maybe in that vein, I think it's also just a fact that there are a number of startup companies that are well capitalized that are becoming the next breed of financial institution. There was a recent Fortune article that I read that was talking about the new titans of finance, I think was the quote. And we're seeing that. There's a new group of entities that is rapidly becoming the household name for finance. And then it's also, I think, a fact that, at least it's been reported, that over 90% of global banks have been testing and experimenting and running proofs of concept related to blockchain technology. So it is disrupting the area of finance and payments for sure globally, and there's a number of consortia that are focused in that space. So maybe to jump right into questions then, I would ask, maybe Jen, we'll start with you, and maybe Dan, others you can supplement, but what types of scenarios are suited for blockchain technology, and where is a blockchain, for instance, not appropriate?
Yeah, so I'm going to start with, the real question, and the financial community or the capital markets community has been looking at blockchain slightly differently, as we all know. And so I'm going to take it from the approach of we're talking about distributed ledgers, right? The real question for us as an industry isn't where does this technology fit? It's more about how do we fundamentally change how we transact with each other today, and then use this technology to do that. So this technology, what are the benefits in it? Well, it brings this data synchronization, right? It helps us manage massive quantities of data in a much more efficient manner. If you can envision organizations looking to one single source of transaction data versus copying that transaction data in multiple data stores within their organization, eliminating that reconciliation is really powerful. But it starts with what are we trying to achieve, right? What solution is needed? What problem are we solving? What inefficiency is out there that we're trying to fix? And then looking at distributed ledger to say, okay, is this uniquely qualified to fill that gap? And if it is, then the industry will get that data synchronization and the ability to leverage that data store in a single source as opposed to multiple data stores within their organization. In terms of where doesn't it fit, I think one of the challenges that the industry has really faced over the last couple of years and looking at this is whenever they've attempted to implement this technology on top of or in addition to existing legacy infrastructure, it fails. Ultimately, you're just piling on additional cost. You need to be thinking about how you remove redundant processes and systems, how you replace existing infrastructure with distributed ledger. Otherwise, you're not getting that maximum value out of the technology.
Mm-hmm. That's great. Other panelists, comments on good use cases for blockchain technology?
I think the way to look at it is blockchain's a protocol to enable you to route money around the centralized monopolies or oligopolies that control most of the payment rails. And I think it's going to do to finance the same thing that VoIP did to the telecom market. It's going to drive rates way down, the quantity of transactions way up, and it's going to result in huge savings for the consumer. So any of the businesses that have not yet really changed with the internet, and essentially all of commerce and communication and most of the things in our daily lives have changed a great deal, but financial payment rails, kind of correspondent banking haven't really changed very much, and I think blockchain will disrupt that. And so there are pain points like cross-border finance where it's very relevant today, not a science project.
Great, thanks, Dan.
I would like to make even bigger statement. I think the blockchain technology has arrived to fundamentally shift the balance of power between people and government. And why I'm saying this, because, look, there are all the different stages, right? With internet, we all received the equal access to the internet, to information, right? With cryptocurrencies, now we received borderless capital. And actually, it was Milton Friedman, some 30 years ago, who said for the first time that, the role of the government will be dramatically reduced with internet. The only thing that we also need is a digital money, but that will come. He said this 30 years ago. Bitcoin was not invented yet, right? But to me, there are three components: internet, payments, borderless capital, cryptocurrencies, and tokenization. Because tokenization is basically internet of value. You can not only transfer the value, the money in peer-to-peer way, you can transfer any kind of value absolutely without intermediary in the global peer-to-peer way, right? So I think this is really big. This is what we're working on.
Great, thanks. And Igor, I'm going to throw the next question to you, but first, before I do, I'll just tell the audience that we'll be taking a few questions at the end. So if you want to open the app or find Slido and drop a few questions to the panelists, we'll try to address a few of them. But Igor, I know Polymath has been working on standards and protocols related to security tokens. Can you tell us what is the state of play today, right now, for security tokens, for standards, for protocols, for alternative trading systems in the U.S. and I guess internationally as you've been monitoring them? And Olga, I know that you have some thoughts on that too, so maybe we'll let the two of you hit that topic.
So if you really think about what happened over the course of 2017 and 2018 so far, it's like every platform, every protocol company you see out there, they've been really telling you that they're building a Tesla. What they haven't been talking about is that to make that Tesla really useful, you need a supercharger network, you need a bunch of service centers, you need all this other infrastructure around it to make sure that, once it rolls out the door, that you can do something with it other than just charge it at your house and drive it around the block. So I think we're in that very critical infrastructure building phase where we think about the, not to say cradle to grave, but more like cradle to M&A process of how a security exists. And we're now looking really at not just the creation of these instruments, but their maintenance and their upkeep and, covering off all the potential corner cases for what happens if somebody does go bankrupt. What if they go into receivership? What if there's M&A? And from our perspective at Polymath, we've been pushing hard for an open standard. It's EIP 1400 and 1410 that we published just over a month ago. And in it, we would like to start a conversation with the broader community of users and stakeholders to better really promote what are the key ingredients we need in the standard to be able to use it as a replacement for a traditional security setup.
And maybe just for the audience, for those of you who may not be familiar with some of those acronyms, some of you may be familiar with an ERC20 token, which is a standard, a format that really has been the driving force behind the token sales, the initial coin offerings, where these tokens are all interoperable on the Ethereum blockchain. And if I understand correctly, Igor, Polymath really has been trying to develop the ERC20 standard, if you will, for security token offerings.
Yeah.
Right. So we are basically on the same side. We as a company is building the infrastructure for new digital asset space, right? And there are a lot of challenges, right? Standards is one, regulation, security. Those are all like really, really big issues. I'm based in Switzerland. We are running companies through Switzerland and Liechtenstein. Regulation is a big topic for us. And luckily, Switzerland and Liechtenstein and Malta and a lot of European countries are moving forward into creating a new regulatory framework to accommodate the reality of digital assets, where real asset follows the token and not the other way around. So in particular, Liechtenstein is introducing a new blockchain act. We've received regulatory approval as financial intermediary in Switzerland and in Liechtenstein, running for the banking license. And I think this is all what is needed to enable to bring together this old world and traditional regulation of securities and distribution of securities on one side, and this new reality of digital assets, right? Mm-hmm. And you need to figure out all those problems, right? Mm-hmm. So I think we've been very good in Switzerland, in Liechtenstein, and some other places And basically, as we move from utility token and payment token space into security token, the legitimate players, compliant license that can distribute securities in the form of a token. Those are going to be the winners.
Thank you. And Jen asked a good question in our panel prep, which is, who's driving this innovation, right? Are there customers or consumers of security tokens? I mean, is there a demand to issue tokenized securities? Or are these early innovators getting ready for what they anticipate is the next phase? Thoughts? The answer to that question?
I'm still asking the question.
Yeah, but you can answer the question.
You know, like I see, you know, these types of, you know, token sales, as you had called it earlier today. I think, you know, there's clearly a lot of momentum in this space, and it's, you know, when we look at, again, I talk about business model shifts. When we look at the issuance space in general, you know, we've had traditional issuance for such a long time. This year, we've already started to see other business model shifts, right? Direct registration. Spotify did a, you know, direct registration. You see to these token sales, et cetera. So there's clearly momentum, and I feel like they're definitely, the token sales or ICOs, however you want to call them, are being built off of some frameworks we have today, right? There's things like Kickstarter and crowdsource funding and, you know, other initiatives out there, and this is taking some ideas from each one of those and kind of bringing together a larger innovation. My question though goes to, you know, outside of accredited investors, you know, where is the client demand, and how is that evolving, right? I think I try to look at, because I'm in the capital market space, I try to look at how do you bring some of the larger institutional clients to the table, the banks, the large asset managers, et cetera, and what's it going to take for them to participate in these types of offerings, right? So,
and I think it's probably noteworthy that we don't have anyone on this panel from Asia. Right? I mean, I think that maybe the answer to this question might be a little bit different. I mean, it is very hot in areas of Asia. Dan, do you have a comment on that?
A perspective on ICOs. There's this kind of general view or common view out there that ICOs were invented in May of last year at the Consensus Token Fest, Token Summit. God, that's a Freudian slip. Token Summit. And then exploded into everyone's consciousness. 18 billion went into it, and then they went away. And the reality is, ICOs have been around since Mastercoin in 2013, and then Ethereum in 14, and Augur in 15. And we're actually putting in our next investor letter that's going out in about a week. There's a great graph because it shows the slope of the number of ICOs, very, very constant. And then this huge bulge over the last 18 months, and then back to what I consider completely normal, coming up with an incredibly functional token that is, you know, has some value, is useful. It's really rare. They only come out a couple times a month at most. So, you know, we're really going back to the kind of the normal pace of it. And the graph actually looks like that graph of a snake eating an elephant in The Little Prince, right? There's a very small line, this huge hump, and then it goes back. And I think we're going back to a much more normal environment.
Well, and I think there's probably a recognition that a lot of that bolus was activity that would have properly been characterized as securities activity, fundraising activity that wasn't necessarily a sale of a product or a service, and that needed to be treated under, at least in the U.S., the securities regulations, which I think introduces the kind of the need for securities token platforms for things that may not just only be equity, they may be some sort of investment contract, some sort of profits rights, some revenues that are forward-looking and speculative rather than focused on functionality and products.
I think the evolution is going to be basically, so we started, what happened basically? We invented this borderless capital, cryptocurrencies, right? And with that, anybody could move money around the world, right? And then ICO kind of like resulted from that. So there was a global capital formation flowing into startups, right? And now we are back to reality. Okay, so there are regulations in every country, and I need to apply and register my security offering in every country. So this is, to me, a temporary phase, right? And from this phase, we will go back into this global issuance and global liquidity pools. But before that, we need to get all the homework done, establish the standards, agree on KYC AML, agree how we do it, how we register companies, move forward to decentralized exchanges. This is what we are working on, right? So that we as a platform, we're not anymore like really bank or investment platform. No, we just whitelisting the wallets, right? And investment opportunities are cross-border and customers are cross-border, right? So this notion of decentralized exchange, I think we will be back to this global issuance, but we just need first need to build all the stuff that regulators then will let us do it.
Yeah, interesting. So Jen and Dan, back to you. I mean, Jen, you've probably spent most of your career working with the established financial institutions, the incumbents, if you will. Dan, you spent a lot of time evaluating the startups and placing bets on the next winners from a tech perspective. How do you both see, I guess, my statement that at least the suggestion that like exchanges, for instance, cryptocurrency exchanges are becoming the next financial institutions that are going to be household names or relevant to the millennials? Did you agree with that?
So, I mean, think about the fun fact I mentioned, right? So clearly there are people who are interested in participating in those types of exchanges. I think where I start to just clearly, and we've talked about this a little bit already, in order to get larger institutional clients in, we've got to have these exchanges under the right regulatory frameworks, et cetera, and bring in the same safety, soundness, market integrity, or fair and orderly markets that these clients have today. And then, and I ask these questions or I think about these things because if there's momentum now, how do you really get it to that next level? And is it, and I don't know the answer to this question, is it by getting that next level of institutional clients in, or is it not? Does it just sit alongside some of the exchanges that we have today and it just creates additional opportunity? So I think there's still, for us, there's still a lot of open questions around this in terms of their long-term success, but clearly there's momentum right now, and I think a lot of the companies that we've talked to are certainly trying to do this and launch these exchanges under regulatory frameworks, right, with safety and soundness in mind, and I think that's really positive. And then there's technology challenges that I think that also need to get solved. So I think we talked about this earlier, but a lot of times we go into some of these exchanges and we ask them, okay, so what kind of blockchain are you using to record your transactions? And a lot of them are using traditional technology to capture their transactions on a real-time basis, but then writing to the blockchain later on, right? And so I think if we're really going to maximize the value out of this, do those need to come together a little bit more than they are today? They're open questions, I think.
Dan?
Yeah, I think this is the most fascinating time in the last 5 or 6 years in crypto, because you have this era where the original exchanges, like Bobby Lee, who I love, founded one of the first exchanges. Bitstamp also founded in 2011. They've been building this out for 7 years without really any kind of legacy incumbent, entrance in the space. And just in the last couple of weeks, there's been some huge announcements. New York Stock Exchange's parent is doing Bakkt, which is going live, as Igor said, on December 12th. That's mind-blowing, a $42 billion market cap entity doing cryptocurrency trading. A week ago, Fidelity announced cryptocurrency custody. There's DRW doing ErisX, which is, again, a CFTC regulated exchange for crypto. So you're going to have it from both sides, right? The startups, the really dynamic, kind of true believers in the Bitcoin project, and then the big, very sophisticated entities coming. And I think it's going to just kind of hit, and a wave's going to come in on the back of that. And then the other way I think finance is changing, to Dax's point, is what Ripple's doing. It's really impressive. They've been at it for 5 or 6 years. Hundreds of really competent developers building code and shipping code, and now they have over 100 banks on their network. They're live in 40 countries. This isn't vaporware anymore. I mean, they're actually using this to move a lot of money around the world, and they're trying a different tack than some of these other projects, essentially doing it within the financial and regulatory structure that already exists. And so I think you're seeing a lot of different ways to kind of get at the old system. And I just want to bring up one little fun fact on what SWIFT actually stands for. Most of us don't really know, but it's the Society for Worldwide Interbank Financial Telecommunication. I mean, that's so 60s, right? And so blockchain can do things. Ripple right now, I think, can do about 1,500 transactions per second. It takes 3 seconds to confirm one. costs less than $1. That's very disruptive.
Yeah. And there are a lot of companies working on different payment solution, right? In our case, we are working on a stable coin backed by Swiss franc. Swiss franc is one of the most stable safe haven currencies, right? And we're going to be one of the first banking institution to issue a stable coin, right? And it's kind of like we need it for the marketplace. We need it for, to create auctions based on smart contracts to enable completely different market structures behind the today illiquid assets and alternative investment space. But I think, back to your point about good news, I like those news. We've never had this period of time back in 2014, 15, no good news, right? Months and months, and now a lot of them. But on the other side, speaking for startup, for challengers side, I have to say, I don't see a really point of it because blockchain is a trustless technology to disrupt institutional landscape, right? It's a technology to drive the next wave of disintermediation, right? The wave of disintermediation that started in financial services some 20 years ago. Now this is going to be the biggest boost, right? So now looking at stock exchanges and banks applying this blockchain, like what's the point? The point is those guys are not there anymore, right? So that's a little bit maybe perspective of the wild startup space, right?
Yeah.
We are very skeptical about it.
What's interesting about, and Dan, you mentioned this too, in terms of just trades per second, right? And so I'm going to throw out just what I think is also good news. So clearly the financial community and just the capital markets industry did not adopt the pure Bitcoin blockchain, and nor do they have aspirations to do that right now. Okay. Ultimately, when you look at some of the technology challenges like performance and scalability, that's a big one. And it's one that even the startups are struggling with in terms of their exchanges, as I mentioned earlier. DTCC actually just commissioned a study. We just completed a study that we commissioned with Accenture, and we looked at 2 commercial distributed ledger platforms, Digital Assets and R3 Corda Enterprise. And we took our U.S. equities clearing and settlement data, right? We, on average daily trading volume, 115 million transactions per day, upwards of 25,000 transactions per second. And that's not even a peak day, right? So that's just, just an average trading day. And so we took those volumes and applied this to a use case with these 2 platforms. And we set a benchmark target of, we wanted them to hit 6,300 trades per second for 5 continuous hours to amass a total of 115 million transactions. Both platforms achieved it. Now, we had basic functionality in there, netting and settlement, and we had a 170 node network, right? We wanted to make this as real world scenario as possible. So these were nodes that were deployed. Yes, we were managing them, but they were all deployed, all done on AWS Cloud. And I think what's really impactful about this is it was the first time that the industry could get some transparency around what the true capabilities of this technology were. Now, yes, they're both private ledgers, so they're obviously remove some of the hurdles to performance and scalability, but even then, I think, 6 months ago, most of these platforms at best, I think, were hitting low hundreds, right? So trades per second.
Yeah.
So,
but even on, I guess I'd say public transactions. I mean, Igor, I imagine, I don't want to put words in your mouth, but I imagine you can say that there's a fair amount of interest and excitement around standards like Polymath, 0x, what DYDX is doing in the commodity space. Is that true? I mean, do you have a sense of what's the interest? Where's it coming from? Is it all just startups? Is it also the incumbents? Give some sense of scale.
It's I mean, the entire kind of security space is really quite wide and diverse, and so I think it's almost unfair to kind of characterize it as like this. If it's a financial security, it's just this one thing, because we have private markets that are very large in scale because they have institutional buyers, and they're financing billion-dollar portfolios of real estate and construction financing, and they're being bought by institutions that I think most people probably have never heard of. And on the kind of very small scale, you have Jobs Act. You have almost quasi Kickstarter type fundraisings, and that is dealing directly with small businesses. And in the middle you also have a bunch of stuff that's kind of mid-scale, and then you also have the public markets. And so I think the most relevant thing here is to think about where all of us can find a fit, because there is a fit for both the incumbent institutions adopting a lot of this technology, and perhaps is going to anger a lot of the the crypto faithful to see that the value capture is going to happen primarily on the service provider side, and a bank is going to save 50 bips here or there. But at the same time, you will have other platforms that come along that can fundamentally change how the general public participates in these projects, and how perhaps if you have the right risk tolerance, but you don't necessarily have a lot of capital to deploy, you can get your chance to, here's a chance to kick at the can, and you can invest in what you hope to be the next Uber or the next Facebook or the next Google, and you can take on that venture level risk without being a very well capitalized venture capitalist.
Mm-hmm. And what I like about it, I think in particular, putting real assets and alternative investments on the blockchain, it creates a more liquid and more accessible investment products, right? Through, because it's fractional ownership, you can cut it as small as you want, and it's instantly settled, and so on and so on. So, so that can potentially create much more liquid products, and already today you see something that I call democratization of access to wealth and to investment opportunities. Because look, in the future, on platforms like ours, people will be able to create a very well diversified portfolio of investments in real estate and cryptocurrencies, venture capital, where everything is a token, and they will be able to achieve that even with investment of 100,000. Whereas today, if you would come to me several years ago, as I was UBS banker in Zurich, I would tell you that if you want to achieve this level of diversification, you might, bring around like 2-3 million portfolio, right? So this access to investment opportunities, this, democratization of finance. This is, like, for me, the most inspiring thing.
Yeah, and that's big. I mean, Dan, just for the sake of time, can you spend a couple of minutes just on payments and cross-border payments? I mean, we're talking about access, democratization of investments, financial instruments, but kind of the killer use case for Bitcoin, for instance, is payments, right? I mean, and it has been. But talk a little bit about that, Dan.
Sure. Blockchain's very good at some things and probably not good at others. And there's some things that aren't broken, like DTCC, transacts 115 million things a day. The thing that is broken is cross-border money movement. It's very expensive. So in most countries, even very primitive countries, you can do a domestic transaction pretty much free and pretty much real time. As soon as you cross a border, it slows way down and gets really expensive. And that even includes from the United States to the United Kingdom, two of the most sophisticated financial countries in the world. If you want to send money from here to the UK, it takes days, and you have no idea how many British pounds are going to pop out the other end. And there's at least 4 banks taking a bite out of your wire. And the irony is, it's literally faster to get a suitcase full of cash and get on an airplane and fly over there than it is to actually wire the money. So with blockchain, you can send the money essentially instantaneously, and with most blockchains, essentially free. To anywhere on Earth, and that's really going to be powerful, both for huge financial use cases, but I think it's going to have its biggest impact in the developing world, where you have so many migrants working in foreign countries. 1 out of 10 Philippine citizens lives in a foreign country and sends their money back home. Even higher percentage of Mexican citizens lives in a foreign country and remits their money back home. So that has to, the cost of that is 9%, and for us in the finance markets, like 900 basis points, whatever, it's just a number. That's a month's wages working at really hard jobs just to pay the remittance company. And with Bitcoin, Ripple, other blockchains, you can do it essentially for free. Because most migrants don't want to download Bitcoin QT and get like super technical, there's a bunch of companies like Veeam or Abra that we've invested in that help migrants move money for 1 or 2%. But the future case is in 10, 20 years, all those migrants will have it on their own phone, and they'll actually disintermediate the companies we're investing in today and be able to do it for free. So it's going to add a huge amount of value. And one of the last thoughts I'd give is, people talk about the 3 billion unbanked in the world. I think that word is itself an anachronism. It's like calling them unlandlined. You know, they never got a landline, right? They went straight to mobile phones. They're not going to get a bank. They're going to go straight to mobile money.
Interesting. Okay, I want to head into a lightning round here where you just get very short, pithy answers. Okay, you can't give explanations here. A few questions for input. So just each one of you, and it's maybe a little bit unfair because I'm lumping global finance all together, but just when it comes to global finance and blockchain or cryptocurrency, where are we in the hype cycle? Like, is it here? Is it coming? Start with you, Jen. Work down the line.
Wow, I think I'd have to separate them. I think blockchain is kind of in this trough of disillusionment, effectively. I think the crypto side is probably on the upwards of the hype cycle.
Okay.
Yeah, I would say that blockchain is a serial killer and it can go through dozens of different industries. In some industries, it's on the trough of despair. In some industries, like cross-border money movement, companies are cash flow positive. It's really working. So it really depends on what use case you're talking about.
And on perspective from which you look, right? So if you're on the startup side, and there are so many great companies, the stuff is being built. A lot of talent, like really great talent, is pouring into this industry every day, right? So the excitement is big, the hope is big, so it really feels good.
Okay. Igor?
I think we're between 2 to 5 years away from the UX really catching up and this whole thing being so transparent that the average person will know that somewhere in there is a blockchain involved, but they won't care because they're just getting a great experience out of it.
Okay. Next question. What is one widely held belief or opinion in the blockchain crypto space that you disagree with, you think is wrong?
So there's a thesis that the whole point of security tokens is that you're going to get a whole bunch of this crypto capital flowing into it. But then when you take a step back and have a more sober look, you realize that even at its peak, it's 800 billion, with about 50% of that being Bitcoin. Right now it's 55% and $200-some billion. That's a drop in the bucket comparing to what the real world operates at in terms of capital size. And given how illiquid all this is, if 10% of those people decide to jump into security token projects, the whole crypto space as we know it right now is going to have another bear market. I think realistically...
Time.
So I think I always laugh when people say, well, Bitcoin and cryptocurrencies are the easiest way to launder money. That's a joke because it's actually the most transparent. You can track now any transaction on Bitcoin network back 10 years ago, right? And this is why the most shady and oppressive governments are so interested in national cryptocurrency, because then they're gonna, have an absolute overview and transparency about everything you guys do, right? So blockchain is not good for money laundering. Implemented properly, your KYC and AML gonna track everything.
Dan.
For me, the biggest misconception is that equity and tokens are similar financing vehicles and a company could do one or the other. In my opinion, they're really antithetical. That a project should be either cooperatively owned with a very useful token, or it should be a venture-backed company that's trying to extract money out of its customer base somehow. And those are really, really opposite. And we've seen in our own portfolio that 95% of the things we've invested in are either projects with just a token and there's no equity, like Bitcoin or Ethereum, there's no equity behind that, or venture-backed companies that there's no token.
That all intermediaries will be disintermediated. So I think, as we've mentioned up here, there's a number of incumbents, for example, that have demonstrated that they're innovators as well. And so I think that's a misnomer.
Great. I'm going to take one question, or maybe two, from the audience here. I like this one. What is most important? What's most important to do to avoid making blockchain companies look like blockheads? In other words, what are the mistakes that blockchain companies or crypto companies are making, and is there a solution to that, something that they can do, kind of low-hanging fruit, to advance their cause, their success with regulators, their traction with investors, their consumer or business customer adoption?
Well, I'd say that it's to recognize what era we're in. And this is a multi-decade thing. You know, the rest of the internet took 20 years to build out from the time of the browser, and it was 20 years before that it actually started. So 5 or 6 years ago, it was exchanges and custodians. Then it was cross-border money movement companies. I think kind of the last thing 10 years from now will be consumer retail, you know, blockchain payment apps.
No other answers to that question? No other good advice? Okay. How about, well, so for blockchain to revolutionize Wall Street, we'll have to include all stakeholders. How do you deal with A, off ledger, and B, interoperability of frameworks? Maybe a good question for you.
Offer them a massive value proposition for why they should be involved. It should be driven by economics and not by the ideology that we want to plug a blockchain-based system in wherever we feel like.
Yeah, I mean, I think we go back to what are we trying to achieve, right? What do you need, right? We need to change how we do things, right? Do things in a different way and use the technology to help us do that. And I think it's in everybody's interest to bring those costs down around on the operational side and think about how they can really do things differently in the future.
Mm-hmm. Absolutely. And I guess I'll just end with just one note myself. I've been here for several years where we started out talking about Bitcoin and its opportunities. We had to shift into talking about blockchain only because Bitcoin kind of had a bad name, misunderstood with financial institutions. And I think that we're back on this uptick where even financial institutions and financial institutions in a broad way, maybe not necessarily global banks, are interested in the digital assets themselves. They're back interested in Bitcoin and in Ether and some of the protocol tokens that can make a difference. And so we're at an interesting inflection point. But let me ask you all to help me give a big round of applause to our panelists. It's been a great discussion.